Hey guys, it's been about a month and a half since I last did a portfolio update here on YouTube, and that is because I've been so busy working on my workshop, which has now successfully launched. I'm so happy with it. I put so much time and effort into that workshop, and I'm just thankful that so many of you guys are showing interest in it and actually taking the workshop. If you do want to partake in that, there is a link in the description below. Since this is a portfolio update, I know, an overdue one, but I am back full steam ahead. You're going to get so many videos from me now, so I hope you're ready for that. I thought it would be relevant to mention that I am now also doing personalized portfolio reviews. These are basically a chance for anyone that wants to send me any questions you have, your portfolio, any recordings of your portfolio, anything like that across to me, and then I will basically spend some time and send you a video back reviewing your portfolio. Of course, this will not be financial advice. The whole point of this is to get a second pair of eyes on your portfolio. I might be able to spot duplications, any imbalances, any opportunities that you're missing, answer any of your questions, anything like that. Again, there will be a link in the description. So before we look at my portfolio, let me just say that since the last update, which was the end of December sort of time, this portfolio is looking a little bit different, and it's been on such a roller coaster. I will be showing you exactly what's in my portfolio with full transparency, how it has been performing, what the biggest winners and losers are, and what I've actually been doing within my positions, with my positions since the last update. Alrighty, so let's start by looking at the total amount invested, the total return, and the overall portfolio amount. So what you can see here is we are in open markets, by the way. The UK markets are currently opening, so this may shift slightly as I'm filming. But the total return since I started this account, started this portfolio, which was nearly a year ago now actually, it's up by 23.42%. Now the last update, this figure, this total return was at about 25%. So clearly something has been happening. It's decreased ever so slightly since the last update, but the total invested amount, this 15,664.96, has increased. I have been able to invest about just over £1,000 since the last update. So I'm really chuffed with that. And to be honest, I am just trying to focus on two main things. Number one, what I can control. Basically, my contributions. That's what I can control, so focus on the controllable, don't focus on the uncontrollable. I'm just trying to be really, really consistent. I'm trying to show up for myself now and show up for my future self financially. And I'm trying to control my mindsets and emotions, try not to let those things affect my investing strategy. And also I'm focusing on researching stocks and staying up to date with my current positions. Of course, things happen outside of my control. Macroeconomic factors, company-specific things have changed, are changing that I can't necessarily control. All I can do is make sure I'm up to date with them, I understand them, and then if I need to adapt my investing strategy or my portfolio because of those, I do so. Now, I have had this portfolio, this exact portfolio in the past, up by like 40% before, which obviously is really nice when that happens. And right now we are still doing really well. You know, you can see it changing here, but up by over 22%, 23% even. But my knowledge of long-term investing tells me that ups and downs, and you can see there's been many ups, many downs in this portfolio, that's normal. It's part of the process. And a little dip here and there is actually really, really insignificant when I think that in 5 years' time, 10 years' time, I'm going to look back on it. You know, I'm not really going to remember the time that my portfolio dropped by 5%, because overall, the aim is to grow my money. Overall, it should go upwards, and, you know, 1 month where it drops a little bit, another month where it goes up, doesn't really matter on, you know, in the grand scheme of things. And I should really expect volatility, especially when I have a portfolio like I do, whereby it's relatively concentrated into a few positions, and those largest contributors are growth stocks. So I am expecting the volatility. But just looking at the last month, oh my days. The last month has been absolutely crazy. You know, we've had a relatively big dip here, and then we had a little bit of an upward movement, and then a bit sideways, a little dip, a little upward movement. And then we suddenly hit this point here, Monday, February the 15th, which we will talk about in just a minute when I'm going through my stocks. This was 2 days after my birthday. So I'm going to count this as the stock market giving me a birthday present. But on Monday the 5th to now, wow, it's just my portfolio, and this is because of one main stock, and we will cover this, has just absolutely just gone a bit wild. Absolutely gone wild and just increased so much. So down here, my portfolio, full transparency here, I don't want to hide when I'm down, I don't want to hide when I'm up. 3.58% since opening, which is not great. If I were to withdraw all of my money at that point, I would not have outperformed the index. And in fact, I probably would have been best just putting my money into a savings account. However, just that short time period has done wonders for this portfolio. And like I said, long time horizon. I'm not about to withdraw any of my money right now, nor was I at this point down here. And in the last month or so, my S&P 500 ETF on my Vanguard account is actually doing incredibly well right now as well, given that the S&P 500 has, of course, recently closed above 5,000 for the first time ever. And that is a position that I've been in for a number of years, a few years, and I don't touch it. I just reinvest the dividends. So all in all, very nice to see at the moment. Anyway, my two largest positions in this portfolio have been doing the complete opposite to each other. So let's start with them. We'll take a look as to what's happening with those two positions, and we'll talk about how the performance of those two has actually shifted my strategy ever so slightly. I planned one thing coming into, this year, and that has gone off track ever so slightly just because I've been reacting to what's actually been happening. So we'll tackle Palantir first. So here's my Palantir position. Last time I gave an update, this position for me was up by 35.21%, which was obviously a fantastic return. And at that point in time, we had a lot of people, retail investors, taking profit. We had the end of the tax year, and there just wasn't that much momentum at the end of last year. In terms of, it was much quieter. There weren't as many catalysts coming up. There weren't as many things happening, new partnerships announced, things like that. So it went a little bit quiet. People were taking their profits, and it meant that Palantir as a stock wasn't going crazy at that time. But this update, oh my days. We are up by 87, you can see here, 87.66%, which is absolutely crazy. Really chuffed with that. Really good return. And then if we look at the actual chart here, which by the way, I'm on Trading 212, and if you do want to get a free share worth up to £100 when you open an ISA account or a general investment account with Trading 212, use my link in the description below and you will get that free share. But you can see that actually in the last month, it's been trading relatively sideways. A little peak here, then back down, little peak, then back down, sideways, blah, 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 blah. Then it hit Monday, the 5th of February. What happened? It went to the moon. It just jumped up, and there was a very clear reason as to why this happened. One word only. Simply put, the Palantir Q4 earnings. Wow, I've got so much to say about these earnings. I've got a lot to share, lots of thoughts, and I want to make an entire video about them, and I'll release that. I'll do that ASAP. But they were really quite strong. Overall, very strong earnings from Palantir. If we rewind a little bit, if we rewind, oh my days, getting too excited. If we rewind a little bit, in 2023, we all know as Palantir investors and anyone just watching the stock market, Palantir saw a massive run in the stock. It happened really aggressively. It happened really fast. And whilst I saw the growth potential in this position with all of the research that I was doing, I did feel, and I think a lot of people, and Wall Street analysts especially, I think, felt like we did need a really solid earnings in order to show the numbers to back up the growth that we were seeing. Along came these Q4 earnings, and I think it's safe to say that we are really starting to see that. We are starting to see the numbers supporting the stock price growth that we've been seeing. And then don't forget that we can be expecting to hear about the Titan contract probably before March. I think we're all anticipating it to be before March. That's kind of what we've been told. But if Palantir get awarded that entirely or alongside other organizations, that will really help accelerate the government side in terms of growth. I do want to start hearing about, getting off track here, we're back to my portfolio in just a second. I've just got some thoughts to share. I do want to personally hear about some more commercial contracts that are not just in the US, globally. That will help diversify even more. But I do think, and I really do think, that this will happen just over time. So, okay, earnings were fantastic, but there clearly was a massive, massive surge here. Was that all just due to earnings? I think mainly it was due to the excitement surrounding earnings and, people seeing the numbers that they needed to see. But also, you've probably heard about these, but Palantir, after earnings, had more contracts, more partnerships announced. And that only then built on that momentum that they were seeing from the earnings. And these partnerships were in a variety of different commercial sectors, which again is really, really great. I love seeing them announce, healthcare contracts, energy sector contracts, everything in between. The more diversified that Palantir can get in terms of sectors, and then in terms of geographical locations, and then in terms of commercial and government, we're winning. Because that means that Palantir become way less reliant on just one or a couple of revenue streams. We've also had some insider trading, which, I'm not fretting about. I'm not concerned. Of course, come on, this increase has been absolutely massive. We're coming off we've obviously just come off the end of last year, which was crazy. It's predictable, that some of these insiders, some of these C-suite executives, are going to be taking some profit. It makes sense. They've worked hard. You've got to remember that when they're selling some of these shares, it's such a tiny, tiny, weeny percentage of their overall holding. So I don't think it's concerning. But yeah, we've had some insider trading. We're probably going to start seeing, and we've already been seeing, a lot of institutions loading up on Palantir because, of course, we are anticipating the S&P 500 inclusion. The next rebalancing for the S&P 500 happens on the third Friday, I think, in March. So hopefully then we can expect to actually see Palantir announced to be added to the S&P 500, but it's not a guarantee. Although they're eligible, ultimately a board of people actually decide on which of the eligible companies are going to get added. So hopefully Palantir will be announced in March, but it's not a guarantee. You can see my average price here, which has crept up slightly in the past, sort of 3 to 4 months, just because I've been continuing to dollar cost average in when the price has been increasing. It was a lot lower than this 4 or 5 months ago, but I'm fine with it. You can see that if I were to sell out of my entire position right now, I would make a very, very nice profit on my total invested amount. So what am I doing? Am I taking profit off the table? No. I haven't been, and I don't plan to just yet, but equally, I haven't been adding that many shares very recently to this position. In the past few weeks, I've not really added very much, and it's not because I don't want to, or I'm not going to, it's just because I've had another big position in my portfolio that has been absolutely screaming for attention. So let's move on to that one. It is, of course, Tesla. My largest position, but as you can see, if you're looking at my portfolio right now, Palantir is, because of the massive increase, is very slowly creeping up. But just in terms of invested amount, Tesla is my largest position. Although the last month, you can see, looking at this chart here, hasn't been doing very, very well, and it has actually been falling to a price lower than my average price. Therefore, I've been really trying to make the most of that opportunity and buy in more shares as and when I can. Now, unfortunately, as Tesla has been decreasing, over the last 1 month, over the last 3 months, I have been able to allocate the money that I would be investing into this position instead of other positions, which has been fantastic, trying to make the most of this dip. I've not been able to invest into it as maybe aggressively as I would like to be. And, you know, hey, I'm just being transparent here. It's because we've had Christmas, and then I visited Prague for my birthday a week ago. 2 weeks ago. God, that's going quickly. Anyway, at the start of February. So I've just been putting in basically what I can afford. Like I said, control the controllables. So yeah, Tesla hasn't been having a very nice time. We see this time and time again. Look, let's just go to a year. It's had massive, massive times of crazy growth, and then it's had big times where it's fallen. And just looking at a 1 year picture, you can see there's definitely some sort of pattern happening here. And we're just in one of those downturns, and hopefully we'll come out of it soon. But, you know, overall, I'm very much in my growth stage. So if it's going to continue dipping for a bit longer, I'm okay with that, providing my thesis, my understanding, my research into the underlying company behind the stock doesn't waver, which at the moment it's not. But anyway, what's been happening with Tesla to cause it to go down? Well, as per usual, many factors, you know, macro factors and Tesla specific factors as well. We've of course had the earnings. They seem like a lifetime ago now, but they've happened in between my last update, so they're definitely relevant to mention. I made an entire video on the earnings, which you guys seem to really enjoy, so I'll link that on the screen wherever it links. I've been doing this for too long and I still can't remember. If you want to watch that video. But aside from that, we've also had the judge ruling against Elon, against Tesla shareholders relating to the compensation plan, which is, it's a nightmare. It's honestly a nightmare, and that's a different conversation for a different day. But of course, that has had impact onto Tesla stock. We've had the German software company SAP, I don't know, basically announcing that they are removing Tesla vehicles from the list of their company car suppliers. We've had the whole Hertz ordeal as well. That's had a negative impact to the stock. We've had many, many media reports, whether they're factually accurate or not, as with Tesla, it happens always. You know, that again has an impact on the stock, downgrades, all of these things that we just see, you know, cyclical. It happens time and time again. But there has also been some really positive news, which hasn't really managed to turn the stock price into the other direction at the moment. But we heard that Tesla were investing $500 million. Yeah, I think it was $500 million to install a Dojo computer in New York, which is a very, very big deal actually, because what that means is that will be able to process millions of terabytes of data from their EVs to basically improve FSD and improve its safety. And then talking about FSD, we've had version 12 rollout. Again, that looks to be the biggest jump in iteration that we've ever had. And from what I can see, the people that have been testing this, the people that have been trying this have good things to say. It looks to be a really, really positive jump in progress. Very, very excited to see how they continue to develop that as time goes on. And then I saw this morning, so this is really, really new, is that they are reducing the price of Model Y vehicles by $1,000 in the US this month. So in February, this discount will stop in March. And the whole point of this is actually really, really strategic. They are reducing them as a way to actually combat the lower demand in sales that is seen in the winter months. So when you look across Tesla data, what you tend to see is that in the winter months across Q4 and Q1, whenever they fall, you tend to see lower sales. And I don't think this is just a Tesla specific thing. I think this is car manufacturers in general. But the whole point of them reducing the price is to obviously attract more people, make more sales. And the reason for that is to keep their manufacturing levels at the highest that they can be, because then that helps efficiency, cost effectiveness. Basically, it's the easiest when they are operating continuously. We've seen lots of announcements about Tesla advertising and educating. I think, again, this is a big shift as to what Tesla has historically been doing in terms of advertising. They've not really advertised at all. They're starting to dip their toes in. I think they were doing that at the back end of last year. And I think the number one thing here to say is, yes, advertising will help, I think, and it's a good thing, but also the educating is really, really important. Educating about what it means to own an EV, everything like that should draw in more customers. We've had the updated Model 3 refresh vehicle being rolled out in North America after it was rolled out in the European markets and in China and doing very, very well over there. And then we heard that Tesla is now has more market share in the US than the likes of VW and BMW. And this is market share not just with EVs, but overall, which is really, really quite a big deal. Now, it is fair to say that it has been a really rocky time for Tesla recently. I felt it in my portfolio. I'm sure you have if you own Tesla within your portfolio. A lot of people are getting a bit panicky, I think. Should I sell out of my Tesla position? Is it going to continue going down? Obviously, that comes up to your own judgment and your own research and your own conviction. But I know that a lot of people are basically wanting Elon to stop posting on X, stop getting political and just focus on his companies and on Tesla. What I'm doing is I'm just continuing to add more whilst it's dropping. And then we've got Nvidia. Nvidia. Oh my, this company, this stock just does not stop going up. Every time I think, okay, surely we're going to get a slight pullback now. Nope, it just keeps going up. It just keeps going up. Of course, you can see it's not a very big position of mine. I actually only added this I started adding on the 22nd of December, which was right here where my cursor is. But even so, since then, absolutely crazy. And it makes a lot of sense. It makes so much sense as to why this keeps happening. It's because the demand is so strong for what Nvidia have to offer. And you can see that right now I'm up by 45.55%, which is absolutely fantastic. But it's worth saying that we've got the earnings coming very, very soon. I think 21st of February, we're getting the earnings. And if it's anything like last time, I don't even know what's going to happen, because last time we saw such a crazy stock price increase after the earnings were announced. So, past performance doesn't indicate future performance. We need to see what numbers, but I think a lot of people are expecting very, very big things from Nvidia this earnings, given all the demand in the sector that we're seeing. I'm thinking, and again, we can revisit this if it happens, if it doesn't happen. I'm thinking that there will most likely be a stock split announced very soon. And if that does happen, maybe a 3-for-1 stock split, a 2-for-1, I'm not sure what it will be, maybe even a 4-for-1. And obviously then it doesn't change the value, blah, blah, blah. But it does mean that the price that people then see is perceived as more valuable. It becomes cheaper. And that probably will then mean that a lot more investors will start buying up shares of Nvidia, which of course, supply versus demand, how any stock moves. Maybe it will push the stock up even more. But we'll just have to wait and see. Anyway, other positions that I've got, Alphabet, been doing very, very well. Amazon, very well. Diageo, not very well. Actually, my biggest loser by percentage, down by 16.57%. Intelia, relatively new position, still trying to build this out like I am with Nvidia. Doing okay, down slightly, but it's been a bit of a rocky time recently. And then Unilever, which is also kind of the same as Intelia in terms of what it's been doing. So the biggest winner right now by percentage increase is Palantir. And then the biggest loser right now is Diageo. And then in terms of allocation, Tesla is still my largest position. Last time it was about 54% of the entire portfolio. Now only 42%. I say only, it's still my largest, but that's just because of how it's been performing and how Palantir's been performing, which is really, really close now. So then Amazon, my third largest, same as last time. Alphabet, my fourth largest, same as last time. And then we've got Nvidia. That last time was such a small percent of my entire portfolio. It is now very, very small as a position still, but it's my fifth largest. And then you can see the rest here as well. I let my Patreon members know in real time when I add or sell any of my positions. But just to fill you in, since last time, I have added a number of times to Tesla. I've been trying to buy the dip. I have added to Palantir. However, the last time that I added anything to that position, it was actually on the 2nd of February as a little pre-birthday present for myself. I've added to Nvidia, Intelia, and Alphabet since the last update. In terms of my plans moving forward, put simply, add more. I want to add as much as I can. I just want to keep adding. What's that saying from Finding Nemo? Just keep swimming. It's kind of my attitude here. Just want to add as much as I can afford, because here in the UK, we are going to be approaching the end of the tax year very, very soon. And I want to utilize as much of my individual savings account as I possibly can. Let me know how your portfolio is doing down in the comments. And if you want me to carry on doing monthly transparent portfolio update videos, then please let me know by either liking this video or dropping a comment, just so I know that you guys want to see them. Thank you so much for watching, and I'll see you in the next video very shortly.